I know I've got some other junk. Guess what? I'm back in Atlanta. The lovely virtues of air travel. Okay. Oh, I've got to turn this down too. Make sure you can hear me. No, I know. There we go. Okay. Make sure I've got my sources. How come on this one, audio mixer? I hope Fidelity, we're going to go over to properties and where is that? There it is. It's all the way down at the bottom. Oof. There's Active Trader Pro. Looking at an Apple chart. So, what the hell's going on? There we go. Hit the thumbs up button. I need to go. Okay. Chat live. I think I'm the only one freaking watching. Okay, I gotta get this going. We're gonna move that back. I'm gonna move you over to Safari. Morning, Joe. I am back on the right coast. Not that there's a wrong coast, but I'm on the right coast. The left coast swing is done. Devon down 1%, under 50 again. Oxy down 1% at 58. PXD at 202, almost under 200 again. God, you could have swung that one a lot. Over 200, under 200. Get it on, well, it's close to 200. UNH up 0.2. It's almost over 500 again. Uber's over 40. Target at 127. God, this target, I mean, it just keeps losing confirmation. So even though we got the algorithm got you in there, I said be careful. It looks like there might be a bounce. There's a good volume. Let me bring this back a little bit. I'm going to bring it back to kind of where it was in the one. Yeah, where it really started to slide here. About the 170s there. So it looks like the majority of people are still holding up here, including myself. I do think it was a good buy here at about 150. I think, again, long term, I think you're fine. The MACD is starting to bounce up, but you can see it's diverged away. So the MACD is going up, but the price is actually going down, which is not a good sign. Not a good sign at all. But target. Snowflake at 171. Shopify's back over 60. You can play that one all day long. Roblox under 40. It's going back over 40 at some point. Pan W took a leg back to 220. Nvidia, get it while it's under 400. Microsoft at some point, I think, pulls back below 300. I mean, that AI trade is strong. If you want to talk about AI trade being strong, good Lord. The AI trade right now, I mean, AI alone, just the symbol AI, which Hindenburg calls a complete fraud. But this one, when it was 18, I said, be careful. But God, that you've doubled your money in what, a month? Let's see. Yeah, May 1st. May 1st at $18. And that's not even low. You lost money for the next couple of days. But May 1st to June 12th, you've essentially doubled your money. And you could have gotten even more. I mean, this one went all the way up to 44 here on May 30th. So within a month, you doubled your money. That's just crazy to me. Okay. The nanny's parking in the driveway. I was gone. The nanny is moving to the driveway, not my driveway, next door neighbor driveway. We got car shuffling going on. Oh, okay, hold on. Let's pull out. I'm pulling out Snapchat. Pulling out Snapchat. And send to so my neighbor's cat, if you guys didn't know it, my neighbor's cat is sick and wasn't doing well before I left, but has made a miraculous recovery. Not full, but somewhat. And he's sitting out on the porch right now. So I had to take a Snapchat. He's sitting, well, I shouldn't say he's sitting out on the porch. They put him in his bed and put him out on the porch because he is an outdoor cat who can't go outdoors right now. There is some paralysis. He's got heart failure and not doing well at all. But this C3AI, Bank of America, I'm going over kind of, okay, Apple, I think Apple's price point here, anything under 180, get it. I mean, you've got gaps here. We'll go over some of this, but why is my notes aren't updating? Hold on, I gotta quit notes and then start back up again so it updates to the iCloud. Because I know I've got more notes than that on here. There we go. There we go. Okay. I'm gonna cut. We're gonna cut. Boom, boom. We're gonna cut. T-Drift, 11 straight days. You know what? I should probably talk about that. 11 straight days of positivity for Tesla. 11 straight days. Gains for the stock. Two things are going on with Tesla. First thing is Elon is back focused. They have some pretty, I mean, as Tesla owners, they have some fairly big things coming up for us. Let's look at the daily. Look at the daily. Look at that. I mean, just look at that. You're going to cover this between 250, 256, 255, and 261. Somebody in our private Facebook group, by the way, I'm going to bring up gaps. Let's see. That's what I'm going to do too. Let me see if I have an Investopedia. There we go. Gap. Okay, we'll move that over here too. Investopedia. Somebody, sorry, T-Drift, I got a little bit distracted, but somebody in the private Facebook group had asked about gaps and why I like gaps and think that stocks go to gaps. They don't always cover, but they're kind of like soft magnets, not hard magnets. But you can see here, I have this gap noted. If you're holding Tesla, and I said this before, the space between 244, where it's trading right now, it's up at 248. It's up 1%. But the space between 248 and this gap is not wide enough to justify holding winners. If you think, and it's a long-term holding, and you're still under 1 year, it's not bad to hold on. But I don't think that at 248, which is where it's trading in pre-market, that I would necessarily, more in Cherry, that I would necessarily hold on. In my mind, I think you're getting stretched with the current market. That RSI and that MACD, you can see the MACD down here in the RSI, they're just a little too high for me, T-Drift. So if you're holding on this one and you're holding below it, you had the golden cross right here, June 5th. We'll talk about it. Golden cross, MACD, and RSI stretched. The gap is only slightly above. Long-term hold, long-term trim, short-term trim, but hold for long. I would say here's the way I take it. So say you bought back here and May 1st, and you're sitting on a gain from 163 to 244. That's short term. So the taxes that you will pay are short term taxes. They could be upwards of 26, 28%. They could be as much as 35% depending on your income. Remember, for short-term capital gains on stocks, you're going to pay the highest level that you will be taxed. So it could be, for some people who are high earners, 35%. If you hold this stock for a year, that tax bill gets cut in half to 15%. So in my mind, Tesla is it's a good company with good earnings, with good profits, with good management. It fits everything. And in my mind, I think you hold this for long term. But if you currently hold it for long term and you're in the positive, or even if you're in the negative, because if you're in the negative, remember, you just can't buy in for 30 days. You wouldn't want to buy in for 30 days on this one with how stretched it is. But that gap up here is not strong enough to hold on to for the upward kind of movement. Now, if we look a long-term one and we look at weekly, you bounced right off the 200-day. I mean, there's nothing to it. Now, could you get back up here to the 350s? I think you're actually going up there. I think 335. Again, I think 300s is in the cards for this one at some point in time. I just don't know that it's within this run. At 250, I think you get some resistance there. To cover that gap, I think you may pull back down. If we go to let's run the 4-hour again. Now, the algorithm, if you want to follow the algorithm has you in. Here's the killer. Over 2 years, the algorithm, it makes you 108%. Versus if you just bought and held 2 years ago, you'd make 20%. So I just, in my mind, for Tesla in particular right now, I think you're holding. I think you're starting to trim as you're getting into those long-term. Short-term, my guidance would be hold for long-term. I just don't think it's worth the tax bill. JP Morgan just settled on Epstein. Douche. I listen, Jamie Dimon, douche. By the way, Taiwan Semiconductor over 100 again. Part of the reason I put this core portfolio together and that I need to make the video how to make money while listening to my podcast. I mean, I think some people have figured it out, but I think others may need a little kind of hand holding. In my mind, I think you get a hold of the core portfolio and TrendSpider, and you do have to subscribe to TrendSpider for that one. But I think you get a hold of that, and then you listen to what my dollar amount is. Like Costco, under 500, buy it. Over 500, sell it. Bank of America, under 30, buy it. Over 30, sell it. Boeing, under 200, buy it. Over 200, you can sell it. Haven't set one for Amazon. Just told you this morning, I think Apple's 180 now. I think with that one breaking 180, I think that one. Disney, under 100, buy it. Over 100, sell it. It's at 92. You still got a long way to go. Google, I think, is putting in 120. Devon, 50. Goldman Sachs, still 300, although it's not quite going to get back to 300, I don't think. Coke, 60. Meta, I'd love to say it's 250, but this one just seems to defy and just continues to go up. You can see in Meta that gap between 230 and 210. I thought it was going to come back there. I don't know that it's ever going to come back there. MPLX is one that, I just buy it for the dividend. mRNA, you trade it, but it just hasn't seen a good day to trade. Microsoft, I still think this one pulls back to 300. Correct me if I'm wrong, but I think at some point this year you can buy that one under 300. Nvidia, it's under 400. Get it. Occidental is still 60, might be 55 if it continues to pull back. PanW 200. But again, if you want to make money, it's quite simple just to listen to find this core portfolio. PXD under 200, buy it. Over 200, sell it. I tend to hold on to it. And the reason I hold on to PXD, 11.33% dividend yield. It's down 7% year to date. But you know what? If I lose 7% over the year, but I get an 11% dividend, pretty happy. I mean, that's 4% difference. Pepsi, I think Pepsi's is 180. I think Pepsi is 180. That 200-day at 180 is pretty. I mean, if you look at a strong weekly on this one, it's not super down, but it really hasn't gone down. I mean, this is COVID right here. Imagine getting Pepsi at 100 and 3 years later, you're at 182. I mean, for a stock like that, God, that's a great one. QCLN is a ETF, a clean energy ETF that I own. It's in the core portfolio because I believe in it. It's one that just hasn't panned out very well ever since 2021. And it's just at its 200-day. You can buy it. It's a good one. Qualcomm, I've said since 110. I think 110 is your swing on this one. Now, the 200-day is only at 120. You're trading at 119. You're easily going to get back to this 134 at some point. Roblox, $40. Buy it under 40, sell it over 40. Shopify, 60. Buy it under 60, sell it over 60. Snowflake is 150. It'll be back at 150. You can sell it over 150. Target is one that's been tough recently because that's just been, I took a look at that one. Taiwan Semi, under 100, buy it. Over 100, sell it. Uber, 40. It's over 40 right now. UNH, it is 500, but it's been tough getting to 500 lately. So this one might be a swing of more like between 490 and 500. VOO is just one you buy and hold. You don't trade that one. And Exxon, it hasn't dipped below 100. It just hasn't. And I think, that's where you're putting in a support level at 100. So you really need to probably do a little bit of digging that. If you are new here, please hit the thumbs up button. First off, if you are here. Second off, think about subscribing. I'm here every Monday or every day that the market is open, unless I'm working. And I've already done my scan, so I can start the podcast whenever. But here's the algorithm. What you're seeing is TrendSpider. If you like what you see, this is my algorithm that shows you when to get in, when to get out. It's based on MACD. It's a MACD strategy with some moving averages in it. It tends to take your emotion out of the trade. So if you've ever sat there and just wondered why the hell, like Tesla, why the hell did I hold on? Why didn't I buy at 119? Why didn't I sell for this 62% gain and then just buy at 163 again or 180? And now we're at 240. Well, if you have ever had those types of situations, the algorithm takes emotions out of your trade. Tesla, you make, like I said, 2 years, you make 108% on the algorithm. I'm not selling you a course. I'm not selling you some, text service where I will text you when something comes up. I'm not selling you a program. I'm not selling you anything. I am giving you a tool. It is TrendSpider, and it's not even my tool. It is a tool that I created a algorithm within. It's a charting program, and TrendSpider, best charting program out there. So many things that I actually don't take advantage of that I need to start taking advantage of. But TrendSpider, their social media programs are the best if you're not following them, even if you don't subscribe. They give so many great ideas on trades. But here, let's pull this volume lever. So this is the volume level. If you guys don't know about volume shelves, volume drives price. And when you see people holding or, where they actually hold, you can see the price is up here. We don't have a volume shelf up here. So there's not a whole lot of people buying up here. There's a whole lot of people who are holding on down here. So in my mind, what this volume shelf tells me is that people who have bought recently are holding for the long term. So it should continue up, in my mind, for Tesla. But that is TrendSpider. Think about subscribing because I do give some tips. There's a newsletter as well. The link is down below. The newsletter is free. I provide charts. It just shows up in your inbox. It's great. It's a great opportunity to try and, understand and just read about the market. I don't do difficult shit like, cup and handle and, oh my God, this is a Williams trend. It's simple and easy. I give you a price target. Like, Uber, $40. You know what's been a great one for me is Sedge. Solar Edge. Now, we've gone over this before. You buy it under 300. You sell it over 300. Here's one, 293. Here's a buy. You got out 0.73. There ain't no way you made 0.73. You made more than that because you got up to 323 before that hook happened. 294. You sell it again up here at 330. It's a nice 10% gain. It got you out here. 341, there's no way I'm buying at 341. 311, no way I'm buying at 311. I was going to buy down here at 294, under 300. So you got 1, 2, 3, 4, 5, 6, 7, and you're in your 8th buy under 300 for the year. You're in your 6-month 8th buy here, but you can sell it over 300 for a profit all the time. Just printing money. Don't do it for all my portfolio, but that's a great way to trade. Again, a bunch of little 1% trades is better than trying to YOLO on options and make 60% on one trade. You ain't going to do it. Oh, the options expire today. Let me put $10,000 into that. I watched a great video last night of the greatest Wall Street bets trades over the past year. Past 6 months, I think, of this year to date. And the guy was going over it. It was great. Okay. Stay tuned. There were 3 big insider buys this week. Insider sales. Huge insider sales that I'll kind of go over. But here's SPY. Look at that. 21% from the October lows. I'll start out with that. Bum, 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 bum. I think I'm going to start the podcast now. Okay, let's start this mofo. Good morning. It's Monday, June 12th. I'm back in Atlanta. After my left coast trip, yesterday was a long day. I think 4 o'clock in the morning I woke up. West Coast time, so 7 o'clock in the morning. Got home at about 4. Dogs are home. All is good. Things are fine. Happy to be here. What you're seeing on the screen, SPY. I think I drew this one. I think I posted it in the newsletter. If you're not subscribed to the newsletter, please subscribe. I will have more work trips coming up where I can't do the podcast. I can't do the live YouTube. So the newsletter will include charts on those days where I don't do a podcast. I will be extra precise, abundant, whatever you want to call it, in the newsletter. I'll post charts. I'll post price points, blah, blah, blah. I'll do everything that you guys need me to do. Again, if you guys have a request for the newsletter, drop it in the private Facebook group, drop it on Instagram, drop it on Twitter, wherever you want. Just drop some type of suggestion for me. Hey, I want this. Hey, I want this stock. I want you to look at Tesla. Can you look at Tesla for me? Well, yeah, I can look at anything that you want me to. Doesn't mean I'm right, because you know what rule number 1 of this podcast is? Don't listen to a douche on the internet. But this is SPY. Again, if you got in the October lows, you're 20% up. It's the official bull market now. Doesn't feel like an official bull market because we've had a lot of pullbacks. We have a lot of trepidation about, are we going into a recession? A lot of kind of, hey, there's a lot of bad news out there that could potentially come. So that's where we're at. But, remember earlier last month, I think there was the triple play of CPI data, inflation numbers, and then the Fed. Will the Fed pause? Will the Fed hike? Well, we got 3 big days. Tomorrow is CPI. So you got the consumer price index, which should include inflation. Wednesday is the producer price index and the Fed. So Wednesday, the Fed is likely to pause on Wednesday. 72% chance that the market has priced in a pause. That's huge, because if for some reason Jerome Powell and the Fed decide, hey, we're not going to pause, we're going to raise another 0.5 point and start breaking shit again, you could see this market come down. There was a JP Morgan article over the weekend, I think, that I read. Maybe it was Friday. But it had a huge warning about the bond market that is pricing in a recession, but the actual stock market is pricing in a soft landing. If we get into a recession and the bond market is correct and it's an extended recession, they expect the S&P to pull back at least 20%. So would put us back to the October lows. If you go down, again, a 20% drop, remember, a 20% drop typically means you almost need double. If you drop 50%, you need 100% in order to gain your way back. So it's not great to trade in your core portfolio out of this, but make sure you've got investments that are good. I talk about it all the time. A lot of my investment is Apple. Apple has done great. It's not that I'm a genius. It's just that Apple has done well. I've been telling you guys ever since it hit 120 in January. I said, hey, it's just too good to not buy. Can you go down to 80? Absolutely. But there's just too much good in Apple. They're getting away from just iPhone. They got the glasses that are coming out next year. I think 180 is your price point on this one. I think anything under 180 is a good price to buy. They're buying back $90 billion in stock. So again, Apple's got a couple of these gaps down here. There was a good question on the Facebook group. What's a gap? Well, here, this is the gap, and I'm going to put this in the newsletter. This Investopedia article. And it goes over how to play the gaps. And you can read it. Here's my overview of gaps. When you see gaps like this, they're like magnets. The stock will typically, the larger the gap, the more likely it is to go back to that gap. Doesn't always have to cover that gap though. It's just a form of reference for you to look at. I'll include that link to Investopedia with the gap. But when I say gaps, that's what I mean. Here's the great thing about TrendSpider. TrendSpider has an indicator called Gap Snake. So no matter what time frame you're on, again, remember a gap is just a space in between candles. So for instance, this one, you closed at 157. 157 was the high on this candle. Well, the next candle, the low was 159. You got a gap between 157 and 159. That's all it is. It's simple. It's sometimes extremely hard to see, specifically on shorter time frames when you have smaller candles, because the time frame just doesn't allow for huge swings. But what I like about TrendSpider, this gap snake, and it identifies the gaps. So it tells me when I look at this chart, hey, there's a gap right here between 175 and 176. Most likely, Apple will come back to that. That's not a huge swing. Now, the gap here down to 166, that might be a little bit of a swing because you've got some volume shelves forming up here between 178 and 180 and 175. So getting down to that 166, you'll have to pass the 50-day. You'll have to pass a lot of these moving averages. And right now, the trend is so much in the favor of Apple that I would say getting back down here will take some type of market or company catalyst. I just don't see it happening. So that's what I mean when I talk about gaps. But yeah, that was asked in our private Facebook group. If you're not part of that group, the link tree is down below. Everything that you need to know about this podcast, about me, it's all in the link tree. Just go to the link tree. You can sign up for the newsletter, sign up for TrendSpider. You can sign up for the private Facebook group, follow all the socials, all of that stuff. Let's talk about insider sales. There were 3 very large insider sales last week. First is Netflix, Reed Hastings. And we can pull up, let's see, insiders. Here is, well, I guess you can't see that behind my head. But Reed Hastings, he sold, what? $10 million worth last year. That just means he needed a pool in his Paris house. So it's not huge, but it's enough that maybe you're getting a little stretched. But remember I talked about gaps. And if we go to the daily here, there's still a huge gap that needs to be filled from Netflix. And they're getting a lot of press about how well they're doing with this password sharing stuff. The gap here is between 457 and say 500. I think you're getting up there. You're trading at 419 right now. 419. You had this golden cross right here of the 50-day over the 200-day. Your 200-day, this is a daily. Your 200 days positive, your 50 days positive, your 9-day is 20 positive, and your 21-day is positive. Sure, there's gaps in here, but are you upset? I think my dollar amount on Netflix, swing trade is 400. I just don't know that it gets down to 400, so I think 418. I think you're safe because here's what I always say. A good company with good earnings, with good products and good profits actually gets back to its price. And I think you're going to get back to that $600 price. It might be a long-term hold where you get back to that price, but you got a writer strike going on where there's no real new content being. So, Netflix is saving a bunch of money by not having new content. They're expanding their user base by shrinking that, by basically saying, hey, you can't share passwords. I think it's a good stock to buy. I really do. Here, we can go over to the valuation's a little bit stretched, but they are making money. PE is 49. Forward PE is 29. That's a bit stretched. It's up 42%. Average target price is 370, and you're trading at 420. That's just because these guys haven't covered in a while. Last upgrade here, April 19th, where they moved it from 350 to 390. I just think when their earnings come out, which is, next earnings, July 18th, I think you're going to hear a lot of talk about subscriber base expanding. So I do think that you can see that. So here's Reed Hastings, June 1st, $10 million worth. So next one, that was a big insider sale. Pan W, the CEO sold $120 million worth of shares. Now, Pan W is a cybersecurity stock. Your boy here owns it. I say the swing on this one is 200. It's trading at 221, was just introduced into the S&P 500. I think this is a great stock to own. But I do think that you should get it under 200. You had this golden cross back here on the earnings in February where that 50-day crossed up. You haven't looked back. Honestly, you just haven't looked back. So if you got it back here in January at 138, kudos to you. I just think that this one, again, it's a little bit stretched as far as the price goes at 220. I don't know that you're getting back to 200. The average target price is 235, so you still have some upward momentum there. Year to date, you're up 57%. If we scroll down here, Chief Executive Officer, there you go, $120 million bucks. He sold it 225, 219. So this is probably where you might want to take some profits if you're hitting the long term. I do think that that one's a good one long term. And the third one is AMD. AMD, which is a chip company, their earnings are coming up in August. So there's nothing, but their product day, I believe, is this week. There is some news on AMD, and it's listen, Lisa Su sold $36 million worth of shares. She probably needed to put, maybe she needed a new engine on her jet. I mean, that's essentially what that is. But if you got in here at 90, under 100 was the price point on AMD. I think back here we were saying, hey, around 80, it's a great buy. Chips will be getting, this is next to NVIDIA. This is your next best innovative AI chip. And if Oracle announces in their earnings this week, and we'll go over Oracle, if Oracle announces in their earnings this week that they're doing some type of deal with AMD, expect this one to shoot up. Today, you're up 3% to 128. You don't have a lot of volume up here, volume shelf, but you do have this gap here between 111. It's about 108 and 115. If we get back there, it would be I would suggest you buy it. I mean, I really would. The support level there is good. If we go over here to, you can see the valuation. This is FinViz. The PE is 518. The forward PE is 30. It's up 92% year to date. Your average target price is 106, and you're trading at 124. The last Piper Sandler overweight, they upped it to 150. So 124 to 150. That would be a great move. And you can see down here, Lisa Su. Yeah, there you go. $40 million worth. So $40 million at about 122. 36 million bucks. So that's a big one. I'm going to talk about a bonus one with insider sales. And this is an absolute just school book. Let me see. It's SMCI. I think SMCI is it. This is a recent pump of stock. It got some type of news that they were doing something with NVIDIA and AMD and the chip company, super microcomputer. This was an absolute 200%. You were trading back here May 1st at 105. But look way back here in November. You were at 60, 70. You're trading at $260 right now. $260. If we go over FinViz and we look at SMCI, we can see their PE is 24. It's not crazy. Forward PE of 23. They're up 218% year to date. But this is what I want to focus on. Is when you look at, through May 30th, you have some buys here, May 11th, 400,000 from a director. You know what? He just sold all of that. So they're looking at, $20, $30 million worth of sales here at 227. When insiders start selling at these extended prices, they're basically saying, we never thought it would get this high. So, we're going to get out. The gap here between 167 and 191 absolutely will be filled. Absolutely will be filled. So SMCI, I just don't see this being a super powerhouse. I don't know much about it, but I can tell you in my world, it's not a powerhouse. It is simply something that you probably should listen to insiders and maybe take a move on. Tesla, 11 straight days of gains. 11 straight days. This is just an absolute powerhouse of a stock. 163 was the buy-in here May 1st. You're seeing this 50-day, 200-day, 9-day, 21-day, all moving positive, all with confirmation way up there. You've got a gap, and I said this before. Gaps are not always filled, but they're more likely to actually be filled when you get close. And when you get close to this one between 257 and 265, that one most likely is going to get covered on this run. And I think I said it last week. If you're in this one long term, maybe time to trim and wait for a pullback. You did just have the golden cross. So the run may continue on this one, and that golden cross is usually pretty strong. You can see when it crossed up here in August, you really didn't have a ton of run again. When it crossed up here in February, you really didn't have a ton of run. So I'm slightly concerned with this cross not being super strong. Could be wrong, but I'd say if you hold this long term, maybe take it. Maybe wait to buy it around 200 again, because we don't see a lot of volume up here in this territory. If I pull it back to its highs, let's see. We're going to pull it back here to the last time it sold up here. There's not a whole lot of people holding up here. That volume shelf is right at 230. So if you're holding long term, I would say trim it. If you're holding short term, understand that your tax basis on this will be your highest tax bracket that you pay. So say you're in the 24% tax bracket. And remember, it's like a glass of milk. 0 to 11,000, you pay 0. So if you only make $11,000, you pay 0. And then from 11,000 up, it's a marginal tax rate. So it's not like all of your tax, you have to look at your effective tax rate to look at it. But your short-term tax gains, it's on your highest level. So understand you could be paying up to 35% in taxes if you sell short-term. Why not hold it for a year? This is a stock that has had staying power. When it's ever lost, it's come back. So in my mind, again, good products with good companies, with good management, with good earnings, you just buy and hold it. So if you're in short term, I would say don't trim it. But if you want to, hey, that's your prerogative. I'd say long term, I would be trimming. I am not long term in this one. I actually don't hold a position. I took some short term gains in this. But that's with me knowing that I will probably pay 0 because of some tax loss harvesting that I did earlier in the year. So let's get to some people who asked me to look at stuff. Aiden from Instagram asked me to look at BABA. And I brought up BABA. I said at the 80s, I think you should buy it. When it dipped down here, I said, under 80, this was my price point for BABA, under 80. At 86 and I'm buying, yeah. The 50 days turned positive. In my mind, I think if you're comfortable in investing in China, I think you're good. Here's what you have to understand about BABA. It is back to where it was selling back here in December 2016. This has been a stock that has not been able to find a bottom yet. It found this bottom back here in 2022 at about 58. That slide right there was legendary. Your boy was holding all the way through this slide. I think I bought back here just after COVID when it was around 200. And I rode it all the way up to 300. Didn't sell. Sold it around this time. Yeah, wasn't great. About 141. But I've been looking to get back in. I'm just not sure this is the time. But I do think 80. I think you're putting in your bottom at 80. Honest to God, I think 80 is your bottom. You can see 100 used to be the price point here. It got up there once. I think I would move this down to 80. And I don't know if I can move it. Let's see. I guess I can't move it. But 80, I think, is your price point there. So Aiden, just be comfortable, investing in China. The economy is not working as well as some people had thought. BABA is one of those that, hey, with one headline, this could go back down to 50. And remember, when you're buying BABA, you're not buying a piece of the company. You're buying a shell company in the Cayman Islands that actually has ties to BABA. So if the rhetoric with China and the U.S. gets really, really bad, China's law about foreign nationals not being able to hold any Chinese company stock, that's why it's a shell company in the Cayman Islands. China could easily say, you know what? We're not going to allow anybody to do that. So that shell company is no good. You absolutely get zero. The Chinese could absolutely 100% do that. So just be aware of that. And it goes for, I think we're going to go over JD or Pinduoduo as well. Max on Instagram, he thinks MasterCard is due for a bounce. This one and Visa have been on a run. Back in October of last year, I said when MasterCard dips below 300, I thought it was a fantastic buy. MasterCard and Visa, so if we look at some of their fundamentals in FinViz, the PE is 30. I mean, these guys are basically, it's a financial company that's being valued as a tech company. Because let's be honest, that's what MasterCard and Visa do. They allow you to spend your cash using a plastic piece of card. And that technology is not cheap. It's innovative, but it's worldwide. It's accepted. It's kind of like the Bitcoin of the boomer world. So your PE on MasterCard is 36. Your forward PE is 25. The average target price is 428, and you're sitting at 369. Now, I want you to remember the PE is 36 and the forward PE 25, because when we go to Visa, which is the gold standard, your PE is actually less, 29 and 22. So in my mind, which one's better? I would say Visa is better than MasterCard just because of the PE and the changes. Understand, they're different companies. They're different companies, and they are different on their trading trading dollars as well. Your target price on Visa is 268. You're trading at 223. So I think MasterCard may have a better opportunity just based if you believe the target prices. But again, the January was the last coverage of MasterCard, and that's when they said, hey, it's 425 is our target price. From an insider's perspective, you're seeing a bunch of sales around 380 and 390. You're trading right now at about 369. I agree with you. I think it's due for a little bit of a bounce. I don't know that it's as big a bounce as I'm willing to take a chance on. If you're playing options, might be worthwhile. Here's the algorithm, though, and this is what's interesting, is you're up, 1.45% today? The algorithm got you out on Friday. And I see this gap up here between 381 and 385. It's just looking like the 200-day is going to provide you support. In my mind, I think you get this under 370. I think 370 might be a good short-term play on this one. If we draw a line at 370, let's just draw a line at 370 right here. We're down a little. I did a little crooked, but you can see 370 right there. If you buy at 370, I think you're good. It's at 374, kind of a rounding error. But Max, I would say 370 on Instagram, on MasterCard is probably the best. Butch from Facebook, he wrote, I'll read you some of the, can I get your thoughts on Dish? A friend asked him about, he lives in the UK, Butch lives in the UK, so I'm going to go on a little bit of rant. I'm not going to read your if you're in the Facebook group, you can read Butch's complete post about Dish, but I'll go on a little bit of a rant. As a former executive within the cable industry, and I wasn't a top executive, I was just a grunt worker, but I did have senior manager, I don't even know what I was, but I worked for Cox, I worked for Comcast, I worked for Time Warner, I worked for a bunch of them. So I was well aware of Dish. Here's my take on Dish. If you don't know, Charlie Ergen is the CEO. He is, and the founder. He is notoriously frugal to the point where executives share hotel rooms on business trips. If you're going to a conference, say you're going to CES in Vegas, and you're a Dish guy, Dish employee, you're sharing a hotel room, including Charlie Ergen shares hotel rooms with people as well. So he kind of puts his money where his mouth is. He's not like treating you differently than he's treated himself. I was never a fan of that. I never looked at kind of getting into that. But Dish Network has been the stepchild of DirecTV. DirecTV is the one that had the Sunday ticket that just lost the Sunday ticket. And DirecTV was built on sports. Both of these companies relied on contracts and satellite services to provide you TV service. And that's all they did well, was TV services. That's it. So it was like, their target goal was between $100 and $120 a month to provide you TV services. They'd suck you in with like a $40 a month for the first year. And then the second year was huge, and it would be free installation. The one thing that they really did well, and both Dish and DirecTV did much better than the cable industry, was actually the technology of the box in your house. And they did that really well. Unfortunately, Dish has not kept up with some of their innovative strategy. They were the first to do a streaming service with Sling, which is, I think it's still one of the cheapest out there at like $19-20 per month. You don't get great channels. It's not a great experience. If you have customer service issues, typically it's not that great. What these guys have that is just ultimately a good thing is Spectrum. And they have 5G Spectrum to launch their own mobile service. Here's what I'm hearing, and I'm just reading it, and I'm not an expert on this, so please do your own due diligence. But I've been told that they have been said to, hey, shit or get off the pot. They're sitting on this 5G Spectrum. They bought it for billions of dollars to build this network. They haven't built the network, so the Spectrum's sitting out there not getting used. Well, the rumor hit last week, and that's what you're seeing, this bounce up here from about $6.70 all the way up to $7.80. The bounce up was that Amazon is going to get into the cell phone business. So as a Prime member, you could get unlimited service, including 5G, from Amazon for $10 a month. And Amazon Prime would subsidize that with your Prime membership. That's the rumor that came out. I think it's probably true that the Amazon and Dish would be the ones to do this. Now, I know Charlie Ergen's negotiating style, and I know Amazon's negotiating style because I have actually interviewed at both companies. I wasn't going to take the Dish job, but it's always good to interview with your competitors just to understand what they're looking at and blah, blah, blah. So I interviewed with them. I understood what they were necessarily looking for, and I understand the negotiating styles of both. I think those butt up, and it doesn't work out unless Dish is desperate to use their 5G. That's the only thing that will save this company because, to be honest, Sling is a cost-heavy service for running a streaming service because of the cost of the programming contracts and the technology. It is cost-heavy for them. The actual Dish TV service, their consumer base is dying off. If you've got kids, name a kid who watches TV. They watch screens, not a TV. So they don't watch any live programming other than maybe sports. But they want a screen. They want YouTube. They want Netflix. They want Hulu. They don't want TV. And Dish is behind the TV portion. So it's a dying, sinking ship. The 5G service is the only thing that will save this. Am I willing to take the chance that Dish runs this good? Well, I just don't think it's a good company with good management, with good products. We'll get back there. This is a company with management, with products, with earnings. It's just, they should be a cash cow. They're just not. The average target price is $16.80. You're trading at $6.59. It's down 53% year to date. You've got a bunch of buys by James DeFranco, who's the director. Just look at the value of the buys. And that's all in August, March. I mean, he's buying a sinking ship. I don't know this James DeFranco dude, but he's buying a ton. Is that James DeFranco, the director? I doubt it. But again, he's buying a sinking ship. I just don't see this being a $16 stock. June 5th, downgrade the benchmark company, buy to hold. Citigroup, May 25th, buy to neutral, $18 to $8. It's sitting up there at the target price of $16 because some of these people that have been older in 2022 have not brought their price targets down from 44, 30. You're trading at $6.59, and these fuckers haven't brought down their price targets. That's the only reason it's up there. So while I think it could, Butch, I really think it could be a decent bet. I just don't know that you're going to make it back up there. I mean, with that 200-day, remember the market that you're in. You're in a bull market, an AI market, a technology market. And this one is just, I mean, it's sinking. So I'd stick to the trend. The other one that Butch wants is Dollar General. And Dollar General, what I told him to do in the private Facebook group is to do a long-term chart of this one, because I do think that these have been beaten down, specifically Dollar General and Dollar Tree. And what you can typically do is look at pre-COVID. Remember, COVID was the great thing that happened to a lot of stocks, and specifically Dollar General and people looking to save money, Dollar Tree. These were, sprouted up in, they were growing. If you drive in rural Georgia, in the rural South, you will pass a Dollar General, and it's just this box store with preservative-filled foods, and there's nothing necessarily. The only things refrigerated, I think, are the beer and the sodas. Everything else in that store is either vacuum packed, like tuna, or it's just got preservatives where the expiration date is 12 years from now, where people can bring it up into space and eat it later. But go back to COVID. And COVID, you're at 155. You're trading at 151. That's where it was pre-COVID. That's where it was going to wind up back. And it's just made that trip. And it made that trip from 222 just down here within 3 weeks. So they've got some problems with rising interest rates. These guys are paying more for their expansion, and they're just not able to justify the cost of that expansion right now with higher interest rates. So in my mind, I think that's where you look at. I think you do have a support level there at about 144. If you wanted to trade it, it's not a crazy expensive stock anymore, like it was back up there in the 300s or so. The PE is 14. The dividend 1.54. It's down 38% year to date. Average target price is 193. So I just look at all those June downgrades. 170, 178, 180. It's still not down to where it was, but I think 140 is probably your bounce up point if you wanted to invest in this. I'm on the AI train. I'm taking that AI train all the way to the station until it slows down. So Dollar General to me is not an AI trade. I'm staying away from it. PDD Holdings for Melissa on Facebook. She wants me to look at this one. It's coming back to this gap between 83 and 90. I think I covered this one before their earnings and said, hey, this one could pop. It just looked like it had put in a bottom. The 200-day is still negative. That 200-day, if it crosses that 200-day at 78, I think you're coming back to fill this gap all the way up to 90. I would probably wait till it breaks and closes above 78. If it breaks and closes above 78, I think you're going to use that 200-day as support. The 50-day, the 9-day, and the 21, they're all positive, but that 200-day is still negative. With the RSI up at 66 and the MACD kind of being stretched, it's the same thing as Tesla. I mean, just in a smaller state. I mean, look at Tesla's stock with that recent rise, and look at the MACD being stretched, and look at that RSI. PDD is kind of the same thing, except the difference is buying into PDD, you're buying into a stock that may not actually get back to its highs. Versus Tesla. Tesla will absolutely get back to its highs. This one, you're just starting your 200-day, which is still positive on the weekly. You're just under it. I just don't know from a China stock that you're getting back to 202. There's too much in there. My weekly stock pick, by the way, if you haven't subscribed to my newsletter, which is Daily Stock Pick, dailystockpick.substack.com, which it shows up in your inbox every day after I record the podcast, so you can use the notes, listen to the podcast, watch the YouTube, get on the socials, everything that I post. But my weekly stock, you want to look at this one. Here's his cumulative rate of return, 1% in 2023. Doesn't sound great, but the Dow hasn't been doing all that well. And remember, his my weekly stock pick is based on the Dow, so he's only got 30 stocks to pick from. But look at 2022. 13% gain. This guy had a 13% gain, and it's free. He provides you one stock to buy on Monday. So if you got a full-time job, there's no reason not to subscribe to his newsletter. None. Subscribe to both. The only newsletter that I recommend is this one and mine. That's it. I mean, I subscribe to a couple of others, but nothing, I think they're lawn and dog stuff. So, but his stock this week is one that I'm not sure to buy. His algorithm is a little bit different than mine. I don't know his algorithm. Boeing is his stock. You're in this one. The algorithm has you in. And I've said buy it whenever it's under 200. I think Boeing has had some problems. I think you're going to see some news this week. I'd be a little bit careful. The algorithm does have you in. So if you're in this one, I wouldn't necessarily sell it, but I'd be a little bit careful buying up here at 217. He's looking for 1 or 2% gains in the Dow stocks. They typically are not that volatile. But you do have this tiny gap here. You can see it right here, 211 to 212, which has already been covered. There's nothing on the downside that I see that, oh my God, it's negative. What I do see that could be a huge catapult for this one is the 50-day going back over the 200, the golden cross. Now, the last time that the 50-day crossed up on the 200-day was way back here in November 22. November 22, it was trading at about 172. It's a great trade. I mean, if you're holding today and you bought at 172 the last time it crossed up, I think it's a great trade. If you take a look at a long-term chart of Boeing, are you upset if you hold this one? Probably not. You're at the 200-day. I mean, you're probably not crazy. But what this company is lacking is good management. I just don't believe in the management of this company. I continue to say it's part of my core portfolio because I think at some point the dividend comes back and then this is a $300 stock. I think when they announce a dividend again, I think it's a $300 stock. They just can't do it right now. They're having some production issues. I think Joe has always mentioned to me, hey, they're just a shit, they've got a ton of management problems. And Joe continues to point that out to me. So, but I like Boeing under 200. So be careful. It is his stock, the weekly stock pick. There's no reason not to subscribe to his newsletter. His newsletter is myweeklystock.substack.com. My newsletter is dailystockpick.substack.com. Two different algorithms, two different newsletters. His comes out on Saturday with a market recap, and on Monday you get an email with what stock to buy. Let's talk about scans. First one is UNH. UNH finally has a MACD cross up. This one, the target, the price that I always say is under 500, buy it, over 500, sell it. We might be pulling that back to about 495 to 490. You're over your 200-day here. You got in at 480 right here. Your boy here holds it long term at about 480, 485, somewhere in that neighborhood. But UNH had a cross up. Second cross up is a oil bear. SCO. SCO had a cross up here at 26.75. It is up 7% today. 7%, 28.65. Oils are getting killed. Again, if we're heading into a recession, energy is going to slump. Exxon is down 1%. PXD is down 1%. Oxy is down 0.32. Devon Energy down 0.28. So your energy's getting hit today. So SCO had a cross up. Another one, I have my fireside chat with Kathy Woods on Wednesday, but SARK, this is a 1.5 short innovation, the ARKK. Had a cross up here at 37.55. The ARKs have been on a run. Maybe it's time for them to pull back. So play your SARK. Another cross up is Hershey, HSY. This one has been tanking of recent. You had buy here, 259, got you out with a 2% loss, got you back in at 255. This is coming off a 22% gain, which you could have gotten out significantly higher. You have this gap. It's been covered, up here. I think you're going to use this 200-day, probably at 250. If you like Hershey's, 250 is not a bad price point to get in. It's still a little bit expensive, but Hershey's a great company. One that has earnings that had a cross up is Adobe. Adobe right now, they have earnings at June 15th. You can see it's a secondary cross up. The initial cross up was when it dipped under the 200-day at 344. And we're in an AI hype rally. If you have not seen the Photoshop AI, it is phenomenal. Makes me want to subscribe to Adobe products. It is unbelievable, the AI that is now in Adobe Photoshop. Really, really good. This gap down here between 368 and 374, unless for some reason they announce, you know what, all this hype of AI, we don't see it happening and we're going to pull that out of our Photoshop, then you're going to see this back down at 300. You have that 50-day bouncing off the 200, God, I couldn't have drawn it closer. You got this gap up here between 440 and 453. It has a cross up. That MACD is super high. The RSI is at 75, a little bit stretched. If we look at a long term of Adobe, you're looking at this one just crossing the 200-day. So is 463 crazy? Probably not. I mean, let's look at some of the fundamentals here. You've got a 44 PE, 25 forward. You're up 38%. Your average target price is 435, and you're trading at 463. But it hasn't been covered. June 9th was the last one. They're saying 525 from Wells Fargo. So, Adobe, they're doing AI right. This is the consumer-facing AI stuff. So I think that's a good one. If you haven't seen it, just Google Adobe Photoshop AI, and you'll see a bunch of stuff. Next cross up, Netflix. I think I talked about this one earlier. I can't remember what I had for breakfast, so maybe I talked about this. But Netflix with the password sharing stuff, this is a $500 stock. It'll cover gaps all the way up. It's a secondary cross up. Look at how high that MACD is. The RSI is at 69. Same thing with Adobe. Even with the insider trade, it's a bit stretched, but I don't see this one as crazy just based on the historical fact that it's a $600 stock at its all-time highs. Another cross-up that we had was T-Mobile. T-Mobile, I was shocked at some people showing me the speeds that they're getting on mobile T-Mobile. This one came down with that news about Amazon potentially getting into the cell phone service. And there's slightly disappointment in earnings. They're just not growing as much as they were. I don't know how you continue to grow at the growth that they have, but you're seeing this gap between 132 and 138. Unlike Netflix and Adobe, you're seeing this MACD super low cross up. You're seeing the RSI 41. 130, 138, you're trading at 130 right now. If we look at a long-term chart of this one, you can see, I think you use that 200-day as a support level at 121. I'm not super stoked about this one, but if you like, T-Mobile and you have T-Mobile service, I do not. I have Visible service. And if you're spending more than $30 a month, $25 a month on your phone service, down below there's a coupon code for $20 off your first month. Visible is provided by Verizon. I use it myself. I love it. It's for me. Because I have so many referrals, it's $5 a month. So, share it with your friends and family, but it's got eSIM, which is great because if you don't want to port your number over right away, you can test an eSIM against against your current, and it's only $5 because the coupon code down below saves you $20. So from a cell phone standpoint, that's what I would do. BlackRock has a cross up, and it's a secondary cross up. You had your initial one here at 646. It's just getting back above the 200-day. Nothing super crazy here. This is kind of a real estate, play. Again, they probably have some exposure to higher interest rates, to some of the commercial stuff, but nothing crazy. And the final one, they have earnings coming up this week, and this is a podcast favorite, and I always say this, but your boy doesn't own it, and I regret not owning it, but it's Oracle. Oracle's earnings are, I think it's tomorrow after the bell. Let's see. Post-market June 12th. Oh, it's today after the bell. 114, you've got a gap up here. Most likely you're gonna hear a lot of AI talk. Oracle is the one that's taking Uber from premise to cloud. So there's some significant revenue there. But it's run so much. I just don't know. They could blow it out of the water on earnings. I mean, they could absolutely destroy earnings, and you'll see this one pop. But that extension there, you're trading at 52-week highs. The previous 52-week high was 110. If we go back from a long-term standpoint, I think you're at all-time highs. Let's see. You're at all-time highs here on Oracle. So there's no double top. There's no top to it. There's better places to put your money with less risk. But Oracle, they do what Apple does, which is just buy back stock and retire it. So if you like that stuff, it's good for you. Okay. Remember, subscribe to 2 newsletters, My Weekly Stock and Daily Stock Pick, both at dubs.substack.com. They're at TrendSpider. If you like what you saw on TrendSpider, you can, with the entries and exits and blah, 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 all of those things, take emotions out of your trade. There is so much more in TrendSpider that I don't use, but I like to make things simple. And I like to take emotion out of my trade. TrendSpider is 25% off using the code DSP25. I'll give you my algorithm. I'll give you my watch list. I'll give you my scanners. I'll give you everything that I have so that you can basically use these tools yourself. So that's it. Okay. I will talk to you tomorrow. Have fun. Okay. Why am I sweating in here? Right now it's hot as fuck in my room. I don't have a fan. Let's see. Nest. I bet I have this at 80. Your boy's a bit of a cheapskate. Oh, why? Stop eco. Why did it think that wasn't at home? I'm going to turn on the air conditioner. Even though it's 75. I think with the fan on it would be okay, but whew, it's hot in here. Okay. I need to export. Oh, there's the air conditioning. Export song to disk. Export. Christian with the Gap joke. The Gap is also what old men do with their shorts when they're sitting on park benches. It's called a Gap shot. Let's see. Apple's up. Let's see. Indices check since it's past 9:30. I can share with you guys. Apple's up, so I'm probably up, I would think. Mother effer, man, I hate Fidelity now. Up 0.2%, so I'm underperforming. I'm gonna call up the private group again. I just don't like this. Yeah. I'm going to call them up again and complain. I don't like complaining, but man, they screwed up that app so much that I don't want to use the app anymore. Let's go over. Okay, we're on Active Trader Pro. If you're new here and you sat through this, make sure you subscribe and hit that thumbs up button. I don't think I was going to go over anything else. Create an episode. Browse. Podcast. There we go. 612. Upload. I go over to YouTube. I'm going to upload this, and then I'm going to do the newsletter. Oh, I didn't change the title. I need to change the title. Huh. I guess I didn't change the title. Oh, well. It's titled SQQQ. Is it time yet? Select file. I want 5. Wait. No. I don't know which one it is. Ah, it's 612, not 612. Okay. Upload. Hold on 1 second. I have to go. Where's the 6.5 one? I'm going to quit GarageBand. Save. Oh, there it is. It's way up there. Move to trash. We'll move these up so that there's not a gap there. I am going to go to Canva. The publishing of. I don't even know what the. You know what? We will say. We're going to put Tesla. Um, 11 straight days of gains. Where are my notes? Let's see. 3 big. Gaps. Okay. Bum, bum, bum. 6, 12. And we're going to share. Download. I have to take some new pictures. Bum, 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 bum. We're going to close out Canva. We'll upload the thumbnail. Oh, it's gonna. Is it? Oh, there it is. There we go. Oh, no. That's no good. We're going to I got to do this one again. It put it down into the logo. Do. Wow. There we go. There we go. Share, download, download. That's better. Yup, quit. I have so many graphic designers who are like, change. Your podcast needs better branding. Douche. Playlists. Daily podcast live recordings. And we're going to say this is podcast Tesla running insider buys for Netflix, AMD, and PanW. Insider sells. SPY. Okay, and then we're going to go over here. Upload failed. Remove. Browse. 612. There we go. Gonna do a transition. Nobody's chatting. I guess everybody's using me as background still. Oh, come on. Why do I have this? This annoys me. Swapping tubes. It's been a while since we swapped tubes. Swapping tubes is going to be, move up there. And we'll insert an ad. And then this one. Oh, I need to do the description. That's why. So we're going to have to go over here. Go to the episode. I'm going to switch back to my visible instead of my friend's visible. Episodes. Notes. Copy. Okay, it's still processing. Oh. Apple's up, man. How fucking high is Apple gonna go? There we go. Save episode. It's saved. We're going to put that in there. We're going to take these notes and copy, and we're going to put these in here. And PanW put my, okay, you know what I'm going to do? We're going to visible, because I need more people signing up through me. I'm getting down to below 6 months of essentially free service. And I think my friend is referrals. Oh. That is mine. Huh. Pull that one back. Oh, I changed it the other day. That's right. Okay, so I need to go into my link tree too. Putty's still outside. I'm gonna go and visit the cat. Let's see. Loading. Why is it not logged in? Some bitch. Okay, this is what I'm gonna do. Okay, why am I not logging in now? There we go. Okay. No. Visible. Done. Let's see. I gotta redo that. Okay, we're just gonna copy, publish now. We're gonna paste. Okay, and no, it's not made for kids. Next, publish, boom, processing. Okay. Now with that, I am going to do my newsletter, but I'm going to go and visit the cat next door. So I'm going to get off here. You guys have a great day. Good luck trading. I hope you trade a lot. I hope you make a lot of money. Okay. I'm out, folks. See you tomorrow.